So thanks all for joining us. Eric Wistrand here from Couch Bronsdorf. We have Chris Rawding here as well, whom I'm sure most or all of you know. We're going to talk a bit about law firm risk management with a focus on cyber risk today. Almost all of you on the webinar know Couch Bronsdorf. Probably none of you have met me before, but I'm a recovering IT guy. So my day job for the last 12 years at Couch Bronsdorf has been Chief Information Officer. So my responsibility has been for the IT aspects of our firm, where the majority of my specialty is on data security, and layers of information security controls. About 4 years ago, I got heavily involved in our cyber liability insurance business with a number of our clients. And since then, I realized that there was an interesting overlap between the IT expertise at a particular client firm and the way they've implemented information security controls, and ultimately what their cyber liability insurance coverage does for them as a risk management tool in their business. So I started to focus on that, and Chris and I work very closely together as it relates to law firms. So Chris handles the malpractice insurance as well as cyber insurance, and I'm there to help provide what value I can to Chris in the process of underwriting and trying to help our clients improve their overall exposures as it relates to information security. So I'm just going to start out with a quick question. You guys are welcome to answer in the chat if you'd like. You're welcome to unmute and perk up if you want. There's been a ton of check fraud around, and so I always ask this question at the beginning of the webinars we have been doing in the lawyers space, law firm space. The question is really, who's using positive pay? Just a quick backstory. I was at a county bar event where I asked this question and no hands went up. And then I said, how many of the law firms cut checks? And all the hands went up. So the reason I mentioned positive pay is because check fraud is absolutely rampant. And if you've ever seen the movie Catch Me If You Can, you know that the premise of the movie was that the fraudster was out there washing checks and changing the pay to amounts and the pay to name, and then cashing them at various banks and trying to leave town before he was caught. Well, that's still happening today in 2023 and 2024. And so I mention this because the critical control that organizations have to implement to prevent check fraud is called positive pay. And if you're familiar with that, when you cut a check and send it out the door, you're also telling your bank ahead of time that that check and that amount and that pay to person can actually voucher and cash that check. Now, if your bank sees any other checks that you haven't told them about, they'll ask you if it's okay. And if you say no or don't say anything, they'll bounce that check. It's a way of protecting the funds either in your operating account or your escrow account. I put this story up here because there's real life impacts of this. This happened to be an email from the CFO of management team of a client of ours where they had implemented positive pay. And the Sergeant Brian of the local police department came by when they were providing a police report of the fraudulent check that had been attempted to be cashed, but because of positive pay was not cashed. And the feedback from Sergeant Brian was that he wished everyone had these types of controls. So when I hear things like that, of success stories of controls working to prevent that type of fraud, I want to share it with people. If you're not using positive pay, I hope you take the time to implement it. And if you're curious about it, we're happy to share a bit more about how it's done. It's free. Your bank should offer it for you. It's just something that really helps out in the process of keeping your accounts safe, right? So Chris, I'm going to ask you to jump in here. As we think about law firms, there's two risks that really come to mind as large risk areas for those firms. One being professional liability, which is your specialty, of course. And the other for law firms is cyber risk, right? So law firms tend to have a ton of non-public information, personally identifiable information. If you're practicing real estate law, you have sometimes money in trust. You certainly have personally identifiable information. If you're practicing estate planning or elder law, or environmental, like construction liability, or commercial law or entertainment law, you have certainly trade secrets of your clients that can be quite valuable, right? And you have a duty, professional duty to protect that data, right?
I would throw plaintiff personal injury in there as well, as far as
yes,
identifiable information.
Absolutely, right? So when we think about how law firms tend to stack up versus other industries, one way of looking at that, and this is an interesting publication from Microsoft. Microsoft has a security score. So if you're in the Office 365 world and you use their hosted email product and all their tools, which many of us do, they give you a security score. And that security score is a composite of the controls that you have in your company. So it asks a lot of questions, and basically, based on your implementation in Office 365, it'll give you a score. So if you have multi-factor authentication, you get 5 points. If you have Windows Defender running on all your computers and it's monitored by a central service, you'll get X amount of points, right? And so one of the interesting things that I found in this is that the average line is a score of about 47%. And you'll see like healthcare, energy, kind of around that area. And then you see the legal industry that's at 28%, right? And so that presents some knowledge to threat actors that there are some what we would call targets of opportunity out there in the legal space. And our goal between Chris and I is to help out our law firms up their security scores within their systems, right? So implementing the right controls, but also think about cyber liability insurance as a way to hedge those risks, right? So very interesting graph here on the left-hand side, a CVE, right? And because I'm a recovering IT guy, I'll explain that acronym for you. It's a common vulnerability and exposure, right? So there's an organization called NIST that produces this database of common vulnerability and exposures, and each one of those CVEs is essentially a vendor like Microsoft or Google or Apple identifying that they have a vulnerability in their software package, and then developing a patch for it, right? So as you can see, big increase in 2023 over 2022, 15% year on year. The year before that, it was an even larger increase, about 22%. And so a total of 28,000 vulnerabilities, over 28,000 vulnerabilities were newly created in 2023. What this means is that attackers are finding new ways into systems, and that patching your systems is really critically important, right? So when we think about law firms specifically, and we look at cyber claims that have happened over the past few years, the leading cause of the entry point is business email compromise, right? So if you imagine a real soft target like scenario, you have a Gmail account for your email and you don't have two-factor authentication on that. So anybody that has gotten your credentials from a previous breach, like for example, the American Bar Association was breached last year, and usernames and passwords for nearly every one of their website users was exposed publicly. So if you had your password for the American Bar Association the same as your email password, they could have compromised your email. All right. And the second largest single area is funds transfer fraud. We all know that especially the firms that practice real estate have a significant exposure there when it comes to funds in escrow. But law firms have working capital funds, so operating funds that are at risk as well, even if you don't practice real estate. And then ransomware. I received a phone call from a longtime client the Friday before Thanksgiving. He called me and said that he was in the office early. He logged into his computer and realized that there were a number of files that had been encrypted and he no longer had access to. And this is a large organization. They had about 1,200 employees, 19 locations. And he said, I really don't know what to do. I need some help. So we provided him the breach response hotline. The insurance carrier then provided him incident response and assigned him to a firm. And I won't go too deep into the story, but I asked him if he'd like me to come down and help him through the process. And at the time he said, no, we got way too much going on. 2 hours later, he called me and said, I really need your help. So for the next 7 days, I was there 20 hours a day, helping them restore their systems, get back online, make sure stuff was secure. And we went through a really significant audit of their overall systems. Many of the things we did during that process were efforts that were recommended by us to them in prior years. The challenge was there's never enough time in the day to implement those things, and they fell victim to a ransomware attack. Luckily, they were very lucky. They had the appropriate insurance coverage. Incident response did an excellent job. The carrier did an excellent job. We helped out on site to make sure that they didn't continue down a path of having a large business interruption claim, and were able to get back up and running and service customers as quickly as possible. But ransomware is as you'll see in the key insight at the bottom there, it's not the leading event type, but the average loss is much larger. So especially in the legal industry, the average ransomware payment's around $310,000. So a couple of questions I'm going to go through very quickly. Whether you have cyber liability insurance or not, it's important to think about how your organization would respond to a ransomware attack that encrypts your company database and all your files, right? Like, what are the first sets of things that you would be doing? How would you plan to get the right IT people in place to help you through that, right? Another way of thinking about the question is business email compromise. We see tons of this happening in the legal space. Imagine a situation where a hacker gains access to an email box in your firm, perhaps your firm administrator's box or your box, and they begin looking back through a set of previously sent emails, and they find a bunch of invoices that you've sent out for retainer agreements, things of that nature. They send those invoices from your inbox again to the same customer, but change the payment instructions. So now the customer has an invoice that looks like it came from you, and that client decides that, yeah, I got to pay this bill. They pay it. They pay $100,000 invoice, and your company doesn't receive the money because the payment instructions were to a third party, the threat actor's, in this case, bank account. How would you work that out with the client, right? Would you go back to the client and say, hey, you need to pay me? Well, the client's going to say, I already paid you, right? Would you go to the client and say, hey, you got to file this claim under your cyber liability policy? That could create some tension and embarrassment between you and the client. So important to think about how you'd react to those things, because there are coverages available for that. They're typically available by endorsement. It's called invoice manipulation coverage. And if you don't have that coverage, you'll be stuck with that loss. So it's really important to look at your cyber policy and benchmark it against a set of coverages that we can help think through and provide for you. Same thing here, but a little more focused on real estate focused firms. You know, we see this ton in the title insurance agency that we run. There's constant social engineering attacks with threat actors posing to be mortgage banks on payoffs and trying to trick staff into wiring a certain amount of money to them. You know, and at that point, once the wire happens, there's a critical period of time that you have to go and try and claw that back if a mistake has been made. And so what is your process, not only after that happens, but your verification process leading up to that? You know, are you following the ALTA standards for wire verifications, right? Especially in the real estate space. Chris, I'm sorry, I have my full screen up here. I can't see any questions if they come in. So could you just keep an eye on that?
Okay,
awesome.
You got it. Yeah, just a little to touch on that social engineering. I mean, I know of at least 5 different situations where law firm clients had mistakenly transferred funds to a place that they never saw it again. And they were duped and they were tricked and they were socially engineered, which is the root of that term. But, you know, no one made a phone call. They just assumed that the party on the other end of the line was legit, didn't follow it up with a phone call. One was about $150,000. I had 2 that had the $60,000 range, and they never saw that money again. So that's the important piece of this social engineering, and probably one of the biggest risk areas, especially with real estate firms.
Chris, to that point, AI and deep fakes are getting so sophisticated. There's a story out of London that was just published, I think, 2 weeks ago, where basically someone in the accounting department that had accounts payable access and acted as like a pseudo controller was invited to a Teams meeting with 15 other people on it from the organization. All of those people were deep faked, so they weren't real, and they had a fake conversation that the result of the conversation was to ask the only real person that had credentials to wire money that was on the call to wire $23 million. The person actually wired the money and it's gone. The threat actor got away with that. And I share that story because with the advent of ChatGPT, large language models, the ability to do deep fakes with video and audio, threat actors are getting increasingly more sophisticated, and they're going after targets that they weren't previously going after before because they can do this stuff at scale, which is just absolutely fascinating and terrifying at the same time, right? So another type of example like that is a threat actor posing as an executive and tricking your accounting staff member into wiring $500,000 to a nefarious bank account, right? The other sort of thing that we don't often think about is you're traveling on a train, you lose your laptop, it's got all of your files on it, and it's not protected with any sort of encryption like BitLocker or anything like that. There's a cost to notify your customers that data has been lost, right? And how would you navigate the regulations of reporting in the various states you have to notify, right? Another thing here that we don't often consider is the cost of downtime and the cost of business interruption or business impact, right? So I use an example here of a business that does $36.5 million in revenue because it's really easy to calculate their per day costs, or you just divide that by 365. If they had a threat actor access their systems and shut them all down or lock them up in a way that only the threat actor could control them, and the insured, the company, the business owner couldn't conduct their regular business, you know, if 1 day of downtime is $100,000 in lost business, 7 days is 700,000. 2 weeks is 1.4 million, and 4 weeks is 2.8 million. And I share that because it's important to size your cyber liability limits with the amount of typical cost downtime would inflict on your business. right? So as we think about the legal industry overall, right, we see law firms adopting technology at a really rapid rate. Some very new, very cool stuff is starting to make its way into the legal industry. So you got client portals, you have customer relationship management systems, you have docket control systems, e-discovery tools, document management systems, obviously email, payment processing software, so you can accept e-checks and credit cards for invoice payments, and the interaction on social media, right? So one key thing to think about is phishing, right? Phishing is usually the entry point by which many of these other cyber claims happen, right? So part of that is training your staff and making sure that their kind of default is to be suspicious of inbound phone calls, inbound emails, making sure they're authenticating who they're talking to, and not just acting in a transactional manner, but really thinking through what some of the potential entry points are, right? And being very cautious of them. So when we think of, when was your last cyber risk assessment? Is your IT person or your managed service provider or whomever you're using, are they doing kind of a regular review of your security exposures? And some of the findings from a risk assessment like that are, user accounts that are still active for employees that have left. Deficient security controls at a vendor. Let's say you're working with a title insurance provider or a realtor or a mortgage bank. How are you looking through and doing some audits on them specifically, right? One big one is MFA has been bypassed on email accounts, right? If you have multi-factor authentication, you want to make sure it's as widespread and well implemented and tested as you possibly can, right? So thinking of the types of data that law firms typically have, right? You have corporate confidential data, you have financial data, especially, as it relates to estate planning or elder law stuff, or in commercial law, right? You certainly have personally identifiable information and perhaps PHI, so personal health information, and certainly you have sensitive employee information, right? So when we think about the regulatory compliance, or what we generally refer to as the third party type exposures, there's 50 different states that have different rules and regulations surrounding the reporting that needs to occur if a data breach were to occur. In addition, you have HIPAA that prescribes what you need to do to report and provide some identity theft protection in those cases, right? And then you have obviously the state data privacy laws like the CCPA and GDPR. Although GDPR doesn't really apply to us in the U.S. So when we think about what happens after a cyber attack, what are the costs that start to inflict pain on the business? Well, the first thing is when you have a cyber attack, you're going to need to bring in highly sophisticated computer forensics and IT talent to help get you under control, get the threat actor out, and remediate some of what's happened. So that's going to be where the incident response firm gets engaged. And usually those run between $150,000 and $250,000 to retain them. You may have an element of cybercrime, and usually that manifests in ransomware, right? Earlier on, I talked about cyber extortion, ransom payments. The typical ransom we're seeing after it's negotiated tends to be between $300,000 and $500,000, right? You're also going to have an impact of liability to others, because that data that you have in your systems is something that is other people's personally identifiable information that's in your care, custody, and control, right? You're also going to have some element, although it may not be, if it's a short window of time, it may not be too significant, but as the days churn on with you not able to access your systems, and really every hour, there's a mounting business interruption component and a reputational damage component. And then finally, data recovery and restoration, right? So even if you have excellent backups, there's a concept of, and what many threat actors are using now, a concept of bricking, which can make your computer completely inoperable and need to be replaced. So if you're a 1, 2, 3 lawyer firm where you might have 7, 8, 9 computers, well, you might be able to spend $10,000 out of pocket to replace those computers. But if you're a firm that has perhaps 30 computers, a $30,000 expense might be a bit too surprising. That's why there's recovery and restoration types of coverages to jump in there, right? And so I'm going to step back for just a second and start to talk about insurance in terms of coverage wording, right? And so for many, many years since the beginning of cyber insurance as a product in the industry, there's been many different carriers that have come into the space, all with very different policy language that varies strongly from carrier to carrier. So largely speaking now, they've started to get together on the same terms, but many of them are wildly different. So they refer to social engineering coverage as one thing. Some refer to it as another. They don't often agree on the wording of funds transfer coverage or invoice manipulation coverage or business interruption. So it's really important to read your policy and work, for instance, with Chris to really understand the differences between the policy you may have or not have and a new proposed policy, right? So on the right-hand side, here's an example of a cyber liability policy, and you'll see the first section there on the top right-hand side is first-party insuring agreements. Right under that is third-party insuring agreements. So first-party is the types of coverages that come into play right after you get breached. So incident response, a law firm to help you with the data breach notification and the regulations surrounding that, the business interruption and lost expenses, right? Digital data recovery and sort of network extortion. Network extortion is the ransom payment should you choose to pay it, right? Third party is going to be your liability to others, right? Let's say a group of customers sue you because you lost their data or there was a data breach that affected them in some way. And then there's elements of electronic, social, and printed media liability, right? So we tend to look at these policies, and it's our job to look for things that aren't there, right? In this case, when Chris and I look at this, there's some coverages that weren't selected. You'll see highlighted here, like computer fraud, funds transfer fraud, and social engineering fraud. There's also a coverage that's missing on this whole insuring agreement that is invoice manipulation, right? And that's that case that I referred to earlier where a hacker gets access to your email and sends modified emails to your customers with different payment instructions, right? So thinking about benchmarks just for a second, on the left-hand side here, you're thinking about the company revenue, right? That your particular law firm has. Now in the middle, you're going to see a gradient of the chosen coverage limit by percentile. So you can see here that firms up to $1 million in revenue largely have either under $1 million or up to $2 million in cyber liability top line limit coverage, right? But as you go to a firm that's over 10 million to 50 million, you start to see them looking for higher limits, right? And so, for instance, Chris, not one of your clients, but separately, I did a review for one of our mutual clients that had a cyber liability policy with another agency. We were reviewing it. The policy itself was fairly comprehensive, But the top line limit was 500,000. And after digging in a bit with the law firm, it was a 30-person law firm, so 30 attorney law firm with about 35 million in revenue. Right. So when I think about that, that to me is grossly underinsured, right, for their potential exposure. So we immediately provided them limit options of 1 million, 3 million, and 5 million. They elected to take the $5 million option because it was just more of a fit for their business. I mentioned a little while ago doing risk assessments on your vendors, so doing risk assessments on the realtors, and this is really focused for these particular options in the real estate space, but it's really any vendor or partner that you work with on a regular basis. You want to make sure that they're taking due measures to protect that personally identifiable information that they've been entrusted with and that perhaps you're working on together, and that they have cyber liability insurance just in the case that something goes wrong. So digging into your title insurance agents, your realtors, your software vendors, and asking to make sure that they hold the appropriate insurance coverage, but also take the appropriate care with their security controls, right? And so what are those security controls? What can law firms do to prevent some of these breaches? As you can see, I've highlighted a few items in red here that are absolutely critical. So multi-factor authentication for email access and VPN access, right? You don't want to allow a threat actor just to brute force their way into your systems by guessing passwords. You need that second factor of authentication, like a text to your cell phone, something like Duo, or if you use Office 365, Microsoft Authenticator, right? Secondly, you want to make sure you have secure backups, right? You want to make sure you're backing up on site to disk on a very regular basis, a couple times a day. You want to make sure you're replicating that to an offsite backup and that it's an immutable backup, that if a threat actor were in your system for an extended period of time, the breach I helped out on of a client, after forensics, we found out that the threat actor had been in the systems for 15 days. So they had a lot of time to go and cause a lot of havoc, which would include erasing the backups had they had access to it. So you want to make sure those are secure. You want to make sure you're leaning on your managed service provider or your IT person so that critical patches are applied within 48 hours. What insurance carriers are starting to do is provide for declining coverage limits if you don't apply patches within a reasonable period of time. And when they say reasonable, they're saying 45 days, which is more than enough time to apply critical patches. But what they're doing, and it's serious, is if you're not working with your IT vendor to keep up with patching, they're going to push declining limits of coverage if you were breached. So it's very important to read the terms of your cyber liability policy and understand what what you need to do in order to comply with them to get the most coverage out of that cyber liability policy. So there's some other key things here like EDR. EDR, you can think of it like antivirus that has an advanced degree, right? It's really, really good. And what it does is it looks for threat actors that are moving laterally within your systems, right? In addition to looking for typical types of malware, right? So it looks for active intrusions and attempts to prevent them. The other most important thing that I can stress here is software restricted policies. If you have a number of employees, they shouldn't be able to install their own software on those computers. There needs to be some sort of policy control like Threat Locker or group policy that prevents that from happening. Because if they can just simply click on a link in an email and it downloads a tool and runs on their computer, there's a heightened and significant risk from that you're going to experience a data breach, right? All right. So we can talk just a little bit about the changes in the cyber liability marketplace. what you can see here is this red line, underwriting requirements. What's happened since COVID, when people started working remotely and underwriters couldn't rely on physical security of offices to keep information safe, you started to see underwriters requiring multi-factor authentication on your email and your core systems, right? So you're going to see that question on a cyber liability application. That's why it's there. They saw a lot more business email compromise type attacks, more phishing attempts. And so what that has resulted in is a relationship of the maturity of your cybersecurity controls as a business is a reflection on how seriously you take data security, right? And the higher your maturity of cybersecurity controls, ultimately the lower the premium rate you're going to pay per $1 million in revenue, right? So just want to pause there for a second, open it up to questions.
Yeah, just a quick piece on that. Much like the malpractice insurance application, the cyber liability application is almost like a guide as to procedures and controls you should be putting in place. You'll see the yes or no questions. Do you have this? Do you have that? It's a guide, and it's things that you need to look at with your IT people. The more yes questions, the better, and you'll see what I'm talking about when you look at these applications. But applications are always a nice framework of what you need to do from a risk management perspective.
Sure. Thanks, Chris. And we're happy to answer any questions that you guys may have. I know that was probably like drinking out of a fire hose. There's a lot of information there as it relates to cyber liability, cybersecurity. And we're happy to be a resource for that, even if it relates to systems that you guys are working on a daily basis. We're happy to provide whatever insight might be helpful to you. And as always, Chris and I stand ready for any insurance questions you may have.